Probal Sen of IDFC. Now, Probal, what do you make of this news flow coming in? And do you think it's some time before you see this development going through?
Yeah, I mean, there are two aspects to this. One is that I'm not too sure what the committee exactly means when they're talking about removal of subsidy, because as you would know, the only thing that is happening right now is that gas is being supplied on priority to domestic and transport segments on the domestic gas prices. Now, domestic gas prices have moved away from being, let's say, subsidized to basically a formula which is linked to international prices, right? So, there is actually no subsidy. The only thing is the pricing formula is such that the domestic gas prices are obviously at a discount of around $3 to $4 to LNG. So first of all, there is actually no explicit subsidy. The only thing is that there is a allocation of domestic gas price, which is done to these two segments. The second, as you rightly mentioned, given the environment that we are in right now, to suddenly impose a 40% increase in prices, which is what would be implied for both CNG as well as for domestic households, in the current situation where the government is focused on promoting gas usage, is something that seems, counterintuitive to us. So we are not sure what the rationale is for removing or talking about, raising effective gas costs for these two sectors. Thirdly,
okay.
Sorry, go ahead.
Go on.
Yeah, and the third point, of course, is that yes, if market prices or higher prices are being paid by domestic households, to then subsidize them via some DBT kind of payments, as is being done for LPG, of course, would be a positive. But then what it means for the CGTs is that there is an element of pricing monitoring that comes into it via the back door for their segments, which hasn't been the case so far. So then there would be a hit on the margins effectively that they can make, which has not been the case, and which is one of the reasons why these companies have been performing well and their profitability has been growing. So whichever way you look at it, implementing these recommendations would be a structural negative, either from a growth perspective, if this price increase is passed on, or from a profitability perspective, if they take a hit on the margins.
Okay, but couple of brokerages are saying that the delivered gas prices will go up very sharply. What is the kind of growth are you factoring in, or are you projecting?
So if one looks at, let's say a $3 increase in effective gas costs, from, you know that today they are getting gas in a combination of APM prior domestic prices plus some other domestic sources in a 75-25 ratio, which typically translates to somewhere between $4 to $4.50 of base price, and delivered is, closer to about $5.50 to $6. That price can go up to about $9. So if one were to maintain the gross margins on these segments at the same levels, that implies at least a 40% hit or a 40% increase that will be required in the retail prices across domestic and CNG segments. So obviously it's a very, very big number that can actually come through. And this number differs from obviously player to player. I'm talking about IGL in particular. MGL, it could be a little bit lower, and Gujarat Gas would also be in that same range. But that's the range that you're looking at. Somewhere between 35 to 40% would be required.
Right. Just a word, say if it comes through, the impact on demand is very unpredictable. What can happen? How is it passed on? So that itself would need a lot of clarity, even if the committee had to clear this.
Absolutely, because as I said, the issue really for the CGTs is going to be that you either pass on the entire impact, at least in CNG. Let's not talk about domestic because there's an element of subsidy and all of that. But for CNG, very clearly, if you have to pass it on, the differential with petrol and diesel actually compresses quite sharply. And frankly, just for a 15-20% differential we've seen in the past, the switch from CNG to petrol does slow down quite a bit. So the 10-11% growth that people are seeing, that can actually come down significantly. As you said, very difficult to put an exact number on it, but obviously the demand momentum is going to slow down for sure. And, or the other way to look at it is that they take a little bit of the margin hit to keep their competitiveness alive, in which case profitability will take a hit even if volume growth doesn't. So either way, it's going to be tough to negotiate this huge increase at one go.
Right, Probal. Thanks so much for taking out time for us.